Hey, good morning, everybody. Today is Friday, December 11th, 2015. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Stocks closed modestly higher on lower trading volume yesterday as declining issues bettered advancers by a narrow margin, and new highs were easily bettered by new lows. The put-call ratio is approaching oversold territory, indicating that we may be nearing a short-term bottom. According to our Ramosi ratio, large capitalization stocks outperformed small yesterday and are outperforming on a 10-day moving average basis. Small caps typically outperform in bull markets. Let's start today with HGSI's Spectrum Analyzer. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, we see that 9 were from the semiconductor devices industry group, 6 were from consumer finance, 6 from airlines, 5 from specialty pharma, and rounding out the top 5, we had 4 from restaurants, 4 from internet-based services, and 4 from biotech. We've been seeing a lot of semiconductor devices, and we've been seeing a lot of airlines recently. Periodically, consumer finance pokes up, and specialty pharmaceutical also periodically shows up on our Spectrum Analyzer. These may be good places to look for trades in this market. Let's take a look at the NASDAQ Composite. NASDAQ yesterday was down 22.3 points, or 0.44%. We closed at 51.45. Trading volume was below the prior day. And for you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend since October 2nd. Right now, in the past month, the NASDAQ has seen 9 distribution days. That's a tremendous amount of distribution. And notice how 5 of these distribution days are clustered here on the right side of the chart. That's an indication that this uptrend may be in trouble. Yesterday, the NASDAQ closed right about the middle of its daily trading range, which was a little bit disappointing. The NASDAQ was trading up yesterday until the final hour of trade, when it sold off to actually close in the lower half of its daily trading range. The bulls would prefer to see it close in the upper half of its trading range. Right now, the NASDAQ is bracketed by support down here in the 4,900 area, and resistance up here in the 5164 range. But we have this convergence between the 50-day moving average and the 200-day moving average. We show the 50 in red, we show the 100 in black, and as these two come together, they should provide a powerful support area for the NASDAQ. If we were to undercut the 200-day moving average at this point, it would be extremely bearish, and I would expect the market to pull back to the 4,900 area and possibly even down to support down here in the 4506 range. Right now, our market timing model is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing our margin on our portfolios at this point. Let's take a look at what the S&P 500 is up to. S&P yesterday was up 4.61 points, or 0.23%. We closed at 2052. Trading volume was below the prior day. The S&P is in an uptrend under pressure, and we have a lot of distribution in the past month. Like the NASDAQ, the S&P has a lot of distribution on the right side of the chart, which indicates that this market may be a little bit strained here. Right now, the S&P is bracketed by support down here in the 2044 area and resistance up here in the 2134 range. Yesterday, the S&P tried to recapture resistance at its 50-day moving average. Notice how the S&P traded above the 50-day moving average and above its 200-day moving average, but in the end succumbed to selling late in the day and was only able to eke out a small gain. This is not very bullish activity. Our timing model on the S&P 500 is on a buy signal. Before we go, I want to talk about the 21-day exponential moving average stop loss strategy that we talked about yesterday. When trading in the stock market, our primary concern is not necessarily to make money, but to preserve our capital, to reduce our losses. If we preserve our capital, eventually the gains will take care of themselves. Yesterday we introduced a strategy, the 21-day exponential moving average stop strategy. And I just wanted to revisit that because I wasn't very happy with the way I explained it yesterday. So what we're looking at here is Facebook. We bought Facebook on this earnings gap right in this area here. When we bought it, we put in an immediate 7% stop to preserve capital. The stock never triggered that 7% stop, but is trading below its purchase price. On Wednesday, we closed below the 21-day exponential moving average, which we show in pink. Anytime we close below the 21-day in one of our holdings in a loss position, this is very important. We only do this when the stock is in a loss position. Right now, we're trading below where we bought the stock. When we close below this 21-day exponential moving average, we put a stop in for 1 day at the low of the bar that closes below the 21-day exponential moving average. Yesterday we did that. Facebook never triggered that stop, and yesterday it closed above the 21-day exponential moving average. So now we go back to our original 7% stop. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.